Aloha, my name is Stan Cox. I'm the principal strategist and broker with SCFSIC. We specialize in the infinite banking tax-free cash growth warehouse strategy. And today we're going to talk about what finance vehicles can be used for the infinite banking tax-free cash growth warehouse strategy. To answer this question, and it really is a very good question, we need to first understand what the main principles are that make infinite banking such an incredible financial tool. Foremost is the ability to leverage your savings without interrupting its growth. Clearly, that is a huge benefit because it means that your money is growing no matter what, essentially providing a source of passive income. Additionally, by leveraging your money in this way, you have the option to put it to work for you in generating additional streams of income, multiplying the power of your money. Along with that first principle, and equally important, is the way your savings grows. And here we have a whole mural of beautiful tiles. The growth is by means of high dividend interest. And I don't mean what has been touted as high interest by the banks in the last several years, as in 1%, 2%. Come on, really? And it's not even that anymore. I mean, there was for a short period of time, a couple of banks were offering over 1% annual interest rate. But come on, really? 1%, even 2%? I mean, what I mean by high interest is guaranteed 4% minimum. And that interest is compounding tax-free. Now, here's a point that most people will agree is pretty special. When you leverage your money in your infinite banking account by means of a loan, which carries very low simple interest charge, you set the repayment mode. And you can change it as often as you like. For example, you can give yourself 6 months or 12 months before you even make a first payment, and then start making monthly payments, whatever mode you want, actually. Let me show you this screen now. Okay. Now, you can change the amount of your payment every single time if you want. You can make payments of various amounts every few months, and then not even make a payment for 15 months, just for an example. Then make monthly payments, or make quarterly payments. I mean, you get the idea, right? It's entirely up to you how often and how much you pay in payments on that leveraged loan. And no matter what, your savings continues to grow, guaranteed. And that brings up another important principle. Your infinite banking account is not at risk of loss. In fact, it can't be attached by any legal means, such as by garnishment, lawsuits, tax collectors, even tax collectors, bill collectors, even bankruptcy. It's protected from all that stuff. There are no penalties, no taxes imposed when you do leverage your account. And when your account is designed properly with the right provider, you will always come out ahead on the interest rates. In other words, even though there is a small amount of interest assessed on the amount of money that you have leveraged, that interest is simple interest. Whereas the interest paid and earned on your money is compounding interest. And the interest earned on your money is at a higher rate than the interest assessed on the amount that you have leveraged. Okay, now let's see which financial vehicles check all those boxes, shall we? Okay. Let's first look at bank accounts. Okay, here we go. What's the highest interest rate you can earn at any bank account today? Most checking accounts don't pay anything, nothing. And those that do are less than 1%. So not even close on the interest. Well, what about savings accounts? The highest interest rate I'm aware of for any liquid savings account today is 1%. Most of them are less than 1%. Certificates of deposit. How about certificates of deposit? All right. The highest interest rate I know of is 2.5% for a certificate of deposit. And they aren't liquid. You know, your money is locked up. If you take any money out before the maturity, a term, big penalties on CDs. So again, no comparison on the interest earned. And even if you can leverage the money in a CD, you would be paying more in interest on the loan than your money is earning in the CD. And that's not good. So you would be obligated to the repayment schedule that the bank sets for you. Not negotiable. What about IRAs, 401ks, 403bs, and all those other qualified retirement accounts? Well, it's true that many retirement accounts are invested in mutual funds that have averaged pretty good returns over the last 20 to 30 years. Averages as high as 7%, some even a little higher. But let's just skip the obvious downside for a second. If you take a loan to leverage the money in those accounts, again, the interest charged on the loan may be very low, but the repayment schedule is dictated by the loan, not you. And if you default, you lose your money. So back to the obvious downside I mentioned, the growth of those accounts are not guaranteed. They are at risk of loss. And as a matter of course, those accounts are charged fees on a regular basis. In fact, if you research the actual results of decades of saving in invested retirement accounts, you'll find that the average return at retirement works out to be only about 4.5% and APR. And then you have to pay income tax on all your money on dispersal or withdrawal, except with Roth IRAs. But those do have annual fees. And the gains on IRAs are generally pretty low, like 2.5%, 3%, 3.5% maybe, but that's before fees and taxes. So, yeah. Now, with the gains on the IRAs are pretty low, and then when you account for inflation, even if you don't have to pay any more tax like with a Roth, you might do slightly better than break even. So what other finance vehicles are there? Oh yeah, participating whole life insurance with a mutual company. The cash-rich part of these policies provide exactly the high compounding guaranteed interest growth needed for infinite banking. The growth is tax-free, and you can leverage it without penalties or taxes or stopping its growth. And it's protected. It's safe. You can pay back the leverage loans any way you want, and there aren't the gains diminishing annual fees that are associated with qualified accounts. And there's a big bonus. These accounts come with life insurance, which is essentially free after 5 years. Bottom line is, the only vehicle that facilitates infinite banking and the tax-free cash growth warehouse strategy is participating whole life insurance with a mutual company and that is properly designed. Not a stock company, by the way. It has to be a mutual company. Okay, I'm going to stop our screen share here if I can. There we go. And so there you have it, folks. The only vehicle that meets the requirements for infinite banking, tax-free cash growth warehouse strategy is participating whole life insurance with a mutual company that has a non-direct recognition policy on their policy loans. And one more point on that is the design of the policy. The design is critical to maximizing the cash growth and utility of the policy. The design needs to incorporate a couple of key components called riders. And really only trained infinite banking specialists know how this works and how to design policies for maximum facility. And that's what we do. That's what we are. We're here to help you. So if you haven't yet, watch our free webinar, How to Become Master of Your Financial World. Just click on the link below in the description box. And please subscribe to this channel. We have answers to all your questions about the infinite banking tax-free cash growth warehouse strategy contained in the short videos on this channel. And go ahead and post your comments and questions here as well. And if you'd like our help in getting your tax-free cash growth warehouse going, again, we're here to help. Give us a call or send us an email. We would love to help you. For now, aloha and mahalo for watching.